I couldn't really do a video without discussing the recent stock market fall. And I think people can take some comfort from the fact that that hasn't been discriminatory. With all markets, both developed and evolving, with the exception of Brazil, markets have fallen since the start of October. Now, at the heart of that issue is the rise in US 10-year Treasury yields. There's a huge US debt load, and that is looking vulnerable given the ramp up in servicing costs that are expected if these yields continue to rise. International fears are also weighing on sentiment, and they're contributing to this slump. We find ourselves in the midst of a US and China trade war. There appears to be little end to this pain being caused by the messy Brexit, thanks to Mrs May, and there are fears rising about the continued growth in Italian debt, given the fiscal expansion planned by their government. Now, the question that we have to ask as investment advisors is whether there is value amid that uncertainty. Clearly, there are going to be companies on AIM, smaller companies that rely on significant news flow drivers to progress their share prices. And as a result, they're largely insulated from these macro drivers. Creo Medical, for example, is a favourite of ours at present. That's a medical device company focused on the emerging field of surgical endoscopy. They've got a range of products which we believe is unique within their industry. And Creo, when you think of a normal endoscope, that enables a doctor to enter the human body through any God-given hole and view a patient's insides to actually diagnose medical issues. With Creo's technology, an endoscope can actually be used to perform minor operations that would normally need an anaesthetic, 3 hours worth of surgery, a 4-day visit in hospital, alongside the consultations that go with a trip like that. With their tools employed, that can be reduced to a morning visit, saving a significant amount of time and money for the healthcare provider, nurses, doctors that are undertaking the surgery. With 4 million colorectal surgeries alone each year globally, that market is significant if it gets deployed. They've got FDA approval, they've got a CE mark already in place, and our view is that increasing numbers of distribution agreements that they sign will actually enable the share price to appreciate in spite of this turbulent market. Fundamentally, the value in any business is its ability to make money in the future. And whilst many may be susceptible to fluctuation in times of uncertainty, there are a number of companies on our radar that have been impeded by this recent drop, and we think unfairly. I've already talked about Fulcrum Utility in one of my previous videos, and the recent share price drop there, I think, provides an excellent opportunity for entry. The share price has been lacklustre because of concerns about the housing market and also potential implications on gas and electricity connections at new build properties. Recently, for example, Crest Nicholson announced the profits warning. They cited that they've been affected by margin pressure. Interestingly though, they still expect to build more houses, and there's going to be an increase in the number of houses that are built this year, and as long as the house builders continue to build properties, Fulcrum will be in a good position to either maintain or gain market share because they get paid per installation. So it doesn't matter how much margin is being made by the builder, all properties require connections to the grid. Another play that we like that I think is interesting is Cooves. Now, if you don't know Cooves, they're the only online Western fashion brand designed in London, specifically for the Indian market. Think of it as the early ASOS of India. They have had some issues, specifically in relation to the Indian government's demonetisation of their economy. That is now behind them. But they've recently refinanced that business and relaunched the brand with the backing of 2 companies. HT Media, one of the largest media companies in India, they own the Hindustan Times, along with the Future Group, who are among India's leading consumer goods companies. Future Group actually own 60 brands already, close to 2,000 retail stores they've got, and they attract over 500 million customers annually. They bought 24.8% of the enlarged group at 10p in July, and they subsequently increased their stake to 29.9% by investing 10 million at 15p a couple of weeks ago, even though the share price of Cooves at the time had drifted to below 10p. So they paid quite a healthy premium. An interesting subplot that's developed over the last couple of weeks though, and that may ignite the shares, is that Amazon are keen to deepen their involvement in the Indian market by committing to invest 5 billion in the country. they've actually reported already that they are likely to buy a 7 to 8% stake in future retail, and that may very well lead to Amazon actually hosting a microsite for associated future retail brands. Now, clearly that could be a positive thing for Cooves, and that's why we like them at this price.